Watch what happens now. China's property market is literally exploding on fire. Not on fire for the good reasons for going up, but on fire that it's burning. But the only data we have at present is anecdotal from the property developer Canaries in the coal mine, which have been under extreme stress for several months now, with now dozens defaulting on their debts, triggering fire sales of housing stocks to raise revenues as they desperately fight to stay alive in the face of the impending debt and interest payments, playing their part in the brewing financial crisis 2.0 that I've been flagging warnings of since early July. So what's my financial crisis 2.0 checklist? Where does it stand? China housing market in distress, check. China's economy slowing, check. US economy slowing, check. Brewing stagflation, 6.2% US CPI. Real inflation is twice that, 12%. So you got a slowing economy coupled with rising prices, so check for stagflation. Black Swan event, what is it? It's the crisis at the ports. It's still going on. There's no sign it's going to get better anytime soon, where a lot of the product out there is spoiled. So another check mark for financial crisis 2.0. Economic models busted, i.e. the workers are refusing to return to work, which is not factored into economic models. So a check mark there. Why are they gonna go and work when they can make 10 times as much trading cryptos? And do check out my crypto in-depth analysis of how you can ride the next crypto mania gravitating in a selection of cryptos, some of which have already 10x'd, i.e. Arweave. That's already 10x. I was buying it at 7 in July. It's now 80, went up to 90. Crazy crypto market, and it's only just beginning. Anyway, economic models busted, so the check mark there. Then we have the financial market proper, the reverse repo market. Banks desperate to swap deposit liabilities for treasury bills collateral, so as to lower the capital requirements, which has drained the capital markets of well over $1 trillion. So that's another check mark. Stock market bubble. Bloody, I've seen Nvidia 106 PE. That stock is going to crash. Take it from me. You don't $800 billion corporation trading it on a P 106 is not going to last long. So valuations have lost touch with reality. Another check mark there. Then we have the fools at the Fed tapering into a weakening economy. Huge risk of a valuation reset. So another check mark there. What I mean by valuation reset, that's housing market, stock market. These high PE ratios, they get reset lower. During the 70s, you know what PEs were trading at? Not 106, 3, 2 and 3. That gives you a taste of what could happen. I'm not going to say PEs are going to fall to an average of 2 or 3, but it gives you a different market than where we are today. We're in a bubble mania frothing frenzy. 106 PE, 800 billion, Amazon 60 PE, 2 trillion. Crazy. So there's a risk of a valuation reset of sorts. And then there's impending doom, which unfortunately I'm contributing towards lighting this fire. What is that doom? That juggernaut, that relentless trend in motion. What is it? It's the march of the climate change megatrend, where all that the world's leaders did at COP26 was what? They just went blah 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 blah, as that spoiled brat keeps coming up with. So it's a check mark there. So yes, financial crisis 2.0 continues to brew in the background. It's bubbling now. It's not just brewing, it's bubbling up. Yeah, we're gonna feel the consequences of it as it comes knocking on many investors' portfolios' doors during 2022, and you never know, it might happen earlier. There's always risk of a crash. That's the thing. Crashes are unpredictable when they're going to happen, just that you can feel there's electricity in the air. So don't be so eager to FOMO, that's fear of missing out if you don't know, into the stocks today to later wish you'd missed out on the preceding 6 to 8 months of price action during mid 2022, where whatever one buys and holds today needs to factor in the potential for lows lower than what we saw in October, and for some a lot lower lows than that. If one is happy with that, then continue to FOMO all the way to new all-time highs for the time being. That's your financial crisis 2.0 checklist. And do check out my full analysis that's been first made available to patrons who support my work. Extensive analysis on updated AI stocks, buying levels and more, so that you are well prepared for what's to come. As I hope my patrons are, as I am, because I put my money where my mouth is. What I say, what my analysis suggests, I implement. It said buy Intel below $50, and that's what I did. Triple my holding of Intel. Anyway, my latest analysis includes AI stocks, updated buying levels, as you can see from this list of contents. And do consider becoming a patron. Supporting my work for just $4 per month. I'm underselling myself. After all, there's inflation. I should inflate the inflation. It should be $50 a month, not $4. And do remember to subscribe to this YouTube channel for new videos as we chart the inflation megatrend in motion, a runaway train. And you got the fools at the Fed saying what? Oh, it's transitory. Oh, there's no real inflation. Oh, it's all, no, you've lost control. You lost control when you started printing money and you have lost. You understand this? The Fed does not control inflation. They have lost. It's like the 70s again. They're just going to keep saying, "Oh, it's it'll come down. It's come down. Oh." They'll do that for a decade. That's what they did during the 70s. They didn't know it was going to unfold the way it did. They just kept saying, "Oh, it's going to fall next. Next 6 months is going to take. Oh, it's going to come down. Oh, it's going to." 10 years later, they go, "What the hell? We've just spent what's that? A decade." Right, let's ramp up interest rates and kill this inflation monster once and for all, and that's what they did. Yeah, who was it? Greenspan. Was Greenspan this? No, it wasn't. It was Volcker, wasn't it? Yeah, that was it. I'm sure it was Paul Volcker. See, I'm getting old. So that's what they did. We've been talking crap for it. That's what they're doing now. They're talking garbage. 6.2%. Real inflation's double that. Crazy inflation is here, as I've been warning. You can't say you weren't warned. Go back and watch my videos from 18 months ago when they first started printing the money. I was saying, like, buy your... Anyway, you're going to watch it later, because I've got that outro. I've got that bit in every one of my videos towards the end, so you can watch it after this. My strategy during the great crypto bear market of 2021 was to accumulate into a select few cryptos that my research had deemed to be, well, relatively safer. Obviously with cryptos there's no such thing as safe. Anyway, deep discounts to the highs of as much as 80% improves the risk reward ratio somewhat. And the rest of this truly extensive analysis has first been made available to patrons who support my work at just $4 per month. Extensive analysis that includes cryptos that I have deemed to have a high probability of trading to many multiples of their current price, most of which still trade at deep discounts, including my price targets or where the they could reach during the next crypto mania when the millennials will be foaming out of their mouths, foaming. So do consider becoming a patron by supporting my work for just $4 per month, $4, for immediate access to all of my analysis and trend forecasts, including learning material and including my recent analysis on why so-called transitory inflation is likely to be permanent. So batten down those hatches for what is to come. And then there is my extensive analysis of silver, including a trend forecast into mid-2022. Also is extensive analysis on the prospects for the stock market into mid-2022, with my next analysis, soon to be published analysis, updating the buying levels for AI tech stocks, Google's, Amazon's, Facebook's and so on, AMD, TSMC. I better stop there. For instance, Intel hit its buying level of $48 last week, which is what my patrons have been patiently waiting for since Intel was trading high at $65, when I was saying no, don't buy at 65, just buy at the buying level. That's why I've set the buying levels where they are, high probability levels that they should trade down to eventually. And here we are, some X months later, $48, buy. And I did what I said I was going to do. I tripled my holding of this quantum AI tech stock, now trading at a dirt cheap P multiple of just 9. I compare that to Amazon on 58, with many more stocks homing in on their buying levels, such as IBM, which I bought splitting into 5 shares of IBM and you get 1 share of Kendall. If you value them together, then the current stock price is around $132, whereas it's trading at $126. So you should have bought before the split, because you'll have a net value of $132 to $133 against the market price around $126. So that's IBM. And don't forget Facebook. We're still buying at $384. Wait for it, $301. That's what it's homing in on. It's not got there yet. It came close, $308 last week. I nearly bought it at $312, but I didn't. But it was close. So do consider becoming a patron by supporting my work for just $4 per month for immediate first access to all of my analysis and trend forecasts. Your mega trends ahead of the curve investing analyst with over 35 years experience. That includes being one of the few who both recognized that the stock market was about to crash in October 1987 and profited from it by shorting the Dow before it crashed. $4 per month is dirt cheap for what you're going to be getting access to, compared to the clowns on YouTube barely out of puberty pumping scams and such like, totally oblivious to the megatrends such as the inflation megatrend and the AI megatrend that I've been banging the drums for since 2015, when you could have picked up the likes of Microsoft for about 1/10 its current price. Then we have the war with China megatrend, which I've been drumming since must be late 2016, something like that. All of these megatrends are where the trends manifest themselves, and all you're usually aware of is like the fluff on top, barely visible fluff on top. That's what most of the commentary is concerned with. You don't even. When did you last hear about the war with China megatrend? I bet you haven't. You heard of AI, but you know it's a megatrend that's going to run for 20 years. And quantum computing megatrend is part of the AI megatrend. Anyway, do consider becoming a patron by supporting my work for just $4 per month. You're not going to get any better value for money than that, as we defend ourselves, protect ourselves from the rampant money printing inflation by the central banks insane money printing as though it's not going to feed through into wage and price inflation. Big inflation is coming, as I've been flagging for over 6 months. It's more like a year now. That's why I was saying last year, if you're thinking of buying big ticket items, do it now before the price hikes, which have transpired. You know, I bought a Culture K7 for £340. Current price on Amazon is, was it £565, and similar for lots of other tech items I bought. For instance, the components in my PC that I ordered in January and got delivered in March was £3,100. Current price of the components is almost £4,000. Crazy, the inflation is here, and it is accelerating regardless of what the indices say. So protect yourselves by investing in assets that are leveraged to inflation, and AI tech stocks are leveraged to inflation and are about to get discounted. So do subscribe to my YouTube channel for such analysis, and do consider becoming a patron.